Dr. Brian Langrin says the central bank decided to hold the policy interest rate at 5.5% because the current inflationary pressures are not expected to be long-term. However, he says if they persist, the bank will be forced to adjust the interest rate.
This decision reflects the MPC's assessment that the recent rise in inflation is being driven primarily by temporary, external, and administrative factors, while domestic conditions remain broadly stable. Holding the policy rate steady at this time is therefore consistent with the bank's mandate, but it does not mean the bank is standing still.
Dr. Langrin, in his first media briefing on Thursday, says the increase in fares, fuel prices associated with electricity bills, and other related services, as well as the cost of food due to the drought, are the three reasons why inflation rose to 7.5% in July, up from 6.7% in June. And he says August and September are expected to be no different.
Looking ahead, the MPC expects inflation to remain above the 4 to 6% target range during the September quarter, before gradually moving back towards the target range over the near term.
The BOJ governor was not able to say how soon inflation is expected to be back within the 4 to 6% target. He revealed that for the next 8 quarters, the risk of inflation is great, not only because of the war in the Middle East or even between Russia and Ukraine, but because of domestic reasons. More spending on rebuilding efforts from Hurricane Melissa, as well as the increase in food prices if the drought continues, can cause more long-term disruption to the inflationary target.
The bank is mindful that higher prices are not abstract figures for Jamaican households, particularly low-income families and fixed-wage earners. Food, transport, energy costs have a direct impact on the cost of living, while businesses face higher operating and input costs. Against this background, the MPC's decision is carefully calibrated to limit second-round effects and support the return of inflation to the target range.
Jamila Maitland, TVJ News.
Producer prices in Jamaica's mining and quarrying industry declined in July, while prices in the manufacturing sector increased. The Statistical Institute of Jamaica Statin says the producer price index for mining and quarrying fell by 2% during the month. The decline was largely driven by a 2.2% reduction in the index for bauxite mining and alumina processing, reflecting lower alumina prices on the international market. Meanwhile, producer prices in the manufacturing industry increased by 0.7% in July. Statin says the increase was driven by higher prices in several major groups, including food, beverages, and tobacco, which rose by 0.9%, refined petroleum products up 0.6%, and chemicals and chemical products, which increased by 1%. On a point-to-point basis, between July 2025 and July 2026, producer prices in mining and quarrying declined by 8%. Manufacturing prices, however, increased by 9.9% over the same period. To the stock market now, the JSE index advanced by 2,822 points today to close at 374,004 points, while the junior market index declined by 16 points to close at 2,897 points. The winners include Knutsford Express, Innovative Energy Group, Kingston Properties, Iron Rock Insurance, and Paramount Trading. Losers were led by First Rock Real Estate Investments, Productive Business Solutions US dollar shares, Berta Paints, JPS 7% preference shares, and the Lumber Depot. 21 stocks traded firm. In foreign exchange trading today, banks and cambios were selling the US dollar for an average $159.56. The Canadian dollar is being sold for $116.50. The pound is going for $217.53, while the euro is selling for an average $186.93. And that's it for the business day. We go to news overseas right after this break.